Other commercial insurance, Business 506, California Lutheran University. The objectives of this lesson are, by the end of it, you should be able to describe commercial excess and umbrella liability insurance, explain business income insurance, and discuss professional liability insurance. Due to the steady rise in size of liability claims over the years, firms have had to purchase insurance policies with higher liability insurance limits than those typically available under commercial general liability policies. These policies have become known as either excess liability insurance or commercial umbrella liability insurance. Excess liability, just what the name implies, provides additional liability limits for claims that are covered under specified underlying coverages. There is no additional coverage for claims excluded by the underlying coverage. These policies take two forms. One, following Form XS, provides additional coverage identical to the underlying policy, so it follows the form. And the next is the XS umbrella form. Provides additional coverage identical to that of the underlying policies, plus additional coverage after a self-insured retention for coverages not provided on the underlying policies. Commercial umbrella liability insurance provides additional liability limits for claims that may or may not be covered under specified underlying coverages. Commercial umbrella policies provide excess coverage over the other liability and coverage purchased by the insured and more comprehensive coverage because the certain claims might be covered under the umbrella policy that are not covered under primary policy. A note here. Individuals who own 4 or more rental properties need a commercial liability umbrella. Most companies, if you have under 4 units, you can have a personal liability umbrella. Once you own more than 4 rental properties, that the commercial policy is the appropriate form. Both excess and commercial umbrella policies require the underlying or primary policy limits as follows. On the CGL, $1 million per occurrence, $2 million general aggregate, and $2 million completed operations aggregate. That's an annual basis. Business auto, $1 million combined single limit. And employer's liability, $100,000 injury each accident, $100,000 bodily injury by disease for each employee, and $500,000 disease aggregate. Business income insurance. Business income insurance indemnifies business firms for loss of income and additional overhead expenses incurred as a result of a covered event. And there's 3 basic types of losses that are covered. One is a reduction in net income. Second, expenses that continue during the period of business interruption, for example, a mortgage on a building that's being rebuilt after a fire. And third is extra expenses incurred to minimize or avoid the suspension of operations. So again, there are 3 basic types of business income insurance: business income with extra expense, business income without extra expense, and extra expense coverage. Other types of business insurance. In addition to the major coverage previously discussed, a variety of additional coverages are available to businesses that meet a number of needs. 1. Crime insurance provides coverage for losses that arise from illegal activities such as burglary, robbery, extortion, forgery, employee dishonesty, and theft. And next one would be fiduciary liability insurance. Provides coverage for claims that result from breach of fiduciary duties, such as pension plan losses because of improper investments. Key man life insurance. Insurance designed to protect a business from the loss of income that results from the death or disability of a key employee. Boiler and machinery provides coverage for damage caused by steam boiler explosion and electrical and mechanical breakdown. And inland marine insurance, specialized insurance that covers goods in the course of transit. Professional liability insurance. The term professional liability refers to liability arising from a failure to use due care and the degree of skill expected of a person in a particular profession. So, professional liability insurance, also known as malpractice coverage, was designed to provide coverage for bodily injury claims and defense costs arising out of a professional's occupation. Professional liability insurance is appropriate for individuals in the following occupations: healthcare professionals, barbers and beauticians, and veterinarians. Errors and omissions insurance, unlike professional liability, was designed to provide coverage for bodily injury and property damage claims and defense costs arising out of a professional's occupation. Errors and omissions insurance is appropriate for individuals in the following occupations: attorneys, accountants, and financial planners, insurance salesmen and stockbrokers, architects and engineers, and real estate agents. Now, directors and officers liability insurance provides coverage to individuals from claims made against them by stockholders, creditors, competitors, etc., and arising out of their duties as corporate directors and officers. Products liability refers to the legal liability of manufacturers, wholesalers, and retailers to individuals who are injured or incur property damage from defective products. Product liability claims can arise from several areas. 1. Negligently made products. Products are improperly manufactured. Breach of warranty. For example, when a product fails to live up to its express or implied warranty. And strict liability. Liability under law, regardless of whether fault or negligence can be proved. So to sum up, we've reviewed commercial excess and umbrella liability insurance, business income insurance, and professional liability insurance. Thank you for your time.